Audio morning brief of the U.S. stock market on Rich Past for critical points, 7:32 a.m. Eastern Time, November 7th. Okay, we'll do the weekly update here in a few minutes, get that posted for the stock market economy. And if I have time, I'm going to do the second, probably the other weekly update that's normally done on Wednesday. We'll probably do that with all the outside markets, a few commodities, gold market and stuff like that. Okay, let's get started here. Big explosion yesterday on the 60-minute chart showing this gigantic gap higher for the S&P 500 index, Dow Jones, NASDAQ. That size of a gap would normally be a clue the market has to come down and fill some of that gap before it can move higher in a longer, more sustainable manner. Okay, so yesterday you could just see they were waiting for people to come in and sell it, and the sellers just wouldn't sell, so the buyers would fear missing out, so they buy a little more, and some of those buyers are actually previous sellers who were betting on the downside, probably cutting them back a little bit. I think it was just basically summarized as net buying, but it was kind of gradual price increase, so they were cautious buyers, and they just kept looking over their shoulder wondering, is somebody going to sell this? Towards the end of the day, it became not necessarily faster up move, just more sustainable. They were buying more often, and I think what it was is they were realizing, boy, the sellers just aren't here today. So the buyers blinked first on that gap higher, and what I'm getting at is the overnight futures went so high that when the cash market decided to honor that, and normally does, I always say, when I was a youngster, we were taught in textbooks, cash markets are king. The derivatives markets of cash markets don't drive the market. Well, 20 years ago, 15 years ago, I started upsetting some people saying, nah, that's a bunch of nonsense. The derivatives market is actually driving cash, but it can only do that so far. On a longer term basis, it is about cash. It is about the bulk of the money, the bulk of the investing, the bulk of business, okay? But it's just interesting on a day-to-day basis. I've even seen studies going back saying for the last 15 years, you could have made more money buying at the end of the day and holding it overnight and selling it in the morning than you would if you bought on the morning and sold it at the end of the day. Okay, so here again we see that example, big explosion because the election, the cash market opens up, matches that, we get this gigantic gap up. If it was a small gap, you might make an argument the market could just go up forever and never come back and fill that gap. But in general, traders, investors assume the markets fill gaps. They come back to them. If it's a downside gap, it comes up to it. If it's an upside gap, it comes down to it. So we got this gigantic gap, and in the S&P 500, we won't see them actually starting to fill that gap until it trades below 5864.89, and it would have to go back to the prior day's close, which is probably like around 5783.07. I don't know if I'm looking at that accurately. So big gap. I think if it's really bullish, it should pull back and just fill some of that gap, and then we'll probably go higher and higher and higher. And if it's going to fill all of it, it's probably a long ways down the road. Now, I'll show in the weekly update, there's an interesting chart pattern called an island reversal, meaning a gap lower on October 31st. And then as they started to put it up on by November 5th, election day, I said, you know what?